close above that 5-minute BISI. Ideally, this gets left open as a breakaway gap, especially if we get this close above the 930 gap. Do want to get, I want to steal this from my other monitor here. Okay, hopefully, ideally it spools. This should, I'd want to see stay open as a breakaway gap, ideally. Signature of strength. I want to see it pop up to opening range high. And then can we get a close above this next smaller roadblock? But same way, use price, SIBI sent us lower on the sell side of this curve. And ideally, we just slice through it. If we come back down into the range now, I think it might be a little seek and destroy. I want to see it spool and continue. Show me it wants to trend. ES testing. 5-minute BISI running this high. And again, why is it not ideal for us to come back into the range? Because to me, that would be, how do we anticipate and identify in real time the likelihood of seek and destroy, or in other words, just consolidation being increased? It would be running lows, okay, running highs in a discount, and then coming back down into the range, right? Seeking both sides of liquidity. So I want to see it just leave this structure, leave this range, and spool away from all of this. Up to these highs, the next objective is 24.7, 3775, as we panned out earlier. These pretty nice equal highs here, but ultimately it would be great to see us just expand. Good, this was left open. Yes, right around CE of that 5-minute BISI. NAS obviously getting here. And then let's look at this coming up to this breaker with the inversion. Another reason we don't want to see rejection here. We could have a little retracement here, but ideally we continue to leave this open because we already worked that 930 gap. That would be super bullish, as it already has shown us. But if we do come down into this, I still think we could bounce from this It's overlapping with that 930 gap, sell side delivery, buy side delivery, breaker, etc., etc. Still can't close above this. Our Thanos. We'll call this Thanos. This is our Thanos. Fair value gap for today. Today could be, if we do run these highs, today could be fun. Now, this is like when we have these smaller, so we just got this close. When we have these smaller roadblocks, I'm a little more lenient with them. Like, and this is when the 2 chance ideology applies. Like, if we were to get below and then get back above, then I'd really want to see it spool. And if it doesn't, then I'm just wrong about this being a factor. So, like, usually it's more prominent in efficiency. It is first presentation fair value gap and a prominent new day opening gap, things like that, that I have that higher confidence in. Still not even returning there. If we can run to this high without even touching our Thanos inversion, that's super bullish. When we don't even return to inversions at all, that's very bullish. S&P right at the high. Can we close above this? Not only on the 1, of course, but the 5. Running these highs. Let's look over here. So I mentioned earlier, it's you versus you in trading. I've been executing live as of recent. I'm not going to execute live every time because I don't want to become a signal bot. I still will the majority of the time, but it's important for you guys even just to gauge your own progress in your trading. But now I have one runner, as you guys just saw. I took it on micros because the stop loss point wise was pretty large. And I'm going to try to get as much juice out of this as I can. At all-time highs. So with that, this is actually a great example of this. Which we rarely use in here. But as mentioned to start the week, we might have to use standard deviations at all-time highs. And I'm using breakers. I have a video of this on my YouTube way back in the day, before I even had any sense of a following. I know I don't have a ton, but when we're at all-time highs, I have to use this logic because this is the only liquidity pool, which that's what we target on a day-to-day basis. But we'll talk about it here. So with breakers, what I'm using, levels I'm looking at, excuse me, I'm using the A to B leg. So if this is a low, high, lower, low, this first is A, B, C. Okay. Usually the levels are super close, so we can use the totality of the A to B, right? But what I'll usually utilize is the bodies, right? So with the breakers, with this, see if we can spool up to all-time high here. Up about 100 points on this. I think ICT turned the algorithm back on. This is what I've been, on the higher time frames, it has been quote unquote clean. Intraday has been tricky and slower and selective, and I've taken a couple losing trades or a couple break evens. But this is the delivery I want to see, this clean expansion when we do leave breakaway gaps. So see how we left this open after close above here? 930 fair value gap. What do we talk about all of the time? Pre-macro dealing ranges. I just realized I got distracted with the standard deviations. I'll revisit that. We make this high. We return there below macro open, which was right here. Then we spool. Then you get your confirmation, right? So I was long right at 950. Okay. You can wait for this close above. And then what did I say? After we close above this 930 gap, what do we want to see? This be a protected low. So if you're a protected low, what does that mean for you? How can you frame a trade around that? That can be a stop loss. If you want to tighten up a bit, you want to see this breakaway gap, just trail a little below the breakaway gap. Okay. Now this is, 60 points or so, maybe more at the moment to all-time highs. But back to this over here, the A to B leg, using these bodies, -1 is the easiest bread and butter target. And you stack that logic, that under